Hello, hi, this is Isaac, and today I wanted to talk about a few stocks that are making some news in this new year. February is almost over, and so I thought it was good to give my perspective on a few important sectors of the economy. Okay, so we're going to be doing a little bit of charting today and looking at the overall big picture for a few ETFs, which are a basket of stocks, as well as a few individual stocks that a lot of people own and have in their portfolio. So the first one that I wanted to talk about is the S&P 500. So the S&P 500 representation of the ETF is S&P 500 Spider. So the ticker symbol for this one is SPY. And what I wanted to do is talk about kind of the last 6 months of this particular ETF and what's been going on. So 6 months ago, it was right around $400. Here, as you can see with the arrow. And that is, I guess, a pretty high level from where it dropped to. So if we go back 1 year, it was around, I guess, 430. And this shows you that, well, first of all, the S&P 500 index is an index covering the 500 largest companies in America. And this is a representation of that. So essentially last year, I've got to go back a little bit further. So 2021, the peak was right around January of last year. So that was, I guess it was trading at 470. And then what happened over the course of most of last year, most of 2022, the actual S&P 500 and most of the stock market went down. And a lot of people did feel that in their portfolio, me included. So it went all the way down to, I guess, 353, give or take. So I think that was a very tough lesson that we kind of went through last year, 2022. So I think that now we're kind of removed from that, so basically wiped out almost 2 years of growth in that very short time span. More recently, going all the way back to November, December, it hit a low of 380. And that was like towards the end of December. But since then, it's been going almost straight up. So you have December, it was trading at 370, give or take. And then it went all the way up to, I guess, towards the end of January, beginning of February, it went all the way up to 416. So 416 was kind of the high over the course of this particular year, 2023. And the last 2 weeks in a row, it's been kind of going down, as pretty much the whole stock market's been going down over the last couple of weeks. So one of the things I want to let you guys know is there's always going to be peaks and valleys inside of the stock market when you're investing. However, that doesn't mean that you should not invest, because it's impossible to time the market. Nobody knows when the next downturn is going to happen, and nobody knows when the next upswing is going to happen. One of the things that I think is probably going to happen, again, this is just kind of for educational purposes, is I think that it does have some strength to continue to go up, because it did, take a decent downturn over the course of the last few weeks. So typically, when you have a couple of weeks in a row where it goes down, over time, the market does typically go back up. So if you look at the 1 month numbers, same pattern, down, up, down, up. So being that it has been going down lately, I think it is kind of due for, for an uptick over the next few weeks. So that's the S&P 500. Represents the 500 largest companies in America, and it's an index. And this SPY is kind of something that tracks that index. It's an ETF that tracks that index. All right, so next we're going to move on from the S&P 500 to the technology sector. The technology sector is represented by QQQ. So QQQ is essentially the NASDAQ, and this is the ETF that represents the NASDAQ, or the technology index, I like to say. And so what you have here is, over the course of, we'll go back 1 year. Okay, again, we see the same activity of kind of an all-time high, beginning of 2021, or excuse me, the end of 2021, beginning of 2022, when it was kind of like the high of the technology situation. And then we have a prolonged downturn. And it did happen. It happened a lot quicker for the technology than it did for a lot of other areas or sectors of the economy. So you said, have here was up at a little over $400 per share. And then you had to go all the way down, almost 50% of the value. It went all the way down. Okay, let's go to the low, 256. Yeah, 256. So imagine that. A lot of people did feel this in their portfolio. A lot of the big companies that are involved in this particular ETF is, you know, Microsoft, Google, Apple, Amazon, all those companies, NVIDIA, all those companies are represented inside of this QQQ. So this is kind of one of the things that happened that was not really unfortunate, but it's all based on supply and demand. So if you don't have enough buyers, the sellers are going to win. If you don't have enough sellers, the buyers are going to win in terms of the ETF going up. So next, we see that as of lately, let's go back to 3 months. So it looks like we do have that same, I guess, end of the year low, around 250, 260 was the amount that it was trading at. 259 is what it was trading at back on the end of December. But ever since then, it looks like it's been going up. So you have a 256 as a low, and then immediately in January, it went all the way up to 311. So you have kind of a sloping curve going straight up. And that's kind of what you want to see when you have performance, is you want to see where it has a strong base, came off the low, has a base, and then went all the way up. And again, there's no smooth mountains, okay? No smooth mountains. So we did have that going on with this particular ETF, all right? And then in the last month, we do have some of the same activity that that took place with some of the other, where it's been kind of gradually going down. So it was at 311 is a high, 313 is a high, and it went all the way down. Okay, look at that, 291. Okay, so going all the way from up here to down here, I think that shows us that, yeah, I mean, I think that it does have a possibility of going back up, maybe to somewhere around the, you know, could possibly go up to the 300 level or a little bit higher. But again, this is a technology index, technology sector. And one of the things that you want to see is you want to see good volume. So this area down here at the bottom is called volume. So this shows how many buyers and sellers are involved in the transaction on a daily basis. And it looks like we do have some good volume days. So again, when you have a prolonged few weeks of the market going down, typically what happens behind that is you do see it, most of the time you do see it going up, okay? So that's a QQQ, and that's a NASDAQ ETF, and it represents the NASDAQ index, typically known as the technology index, all right? So next, we're gonna go to another area that a lot of people are excited about, not if you're going to the pump, but if you're actually invested in it, and this is the energy sector. So the energy sector, over the course of, let's see, the last 2 years, so if we go all the way back to 2021, let's go back a little bit further, we see almost a doubling or a tripling. So if you go back to 2020 or 2021, you see it was trading at like, pretty low, $30 a share, you know, December 2020. I know it's going back a few years. However, we all remember, those times in 2020, it was at $27, $26 a share, and it pretty much doubled or tripled over that time frame. And it went from $25, $26 all the way up to, even higher. Oh, in that time span, it went all the way up to like $93 a share. And one of the things that you see with this particular chart is, again, there's no smooth mountains. Okay, so you see it going up, 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 and it doesn't look like it's slowing down. However, if we go a little bit closer to the timetable, when did this happen? Okay, so that was last year. You did see a big sell-off in September. So September went all the way down. It went from 90 or $80 all the way down to $68 per share. And when this actually happens, what you want to do is pay attention to a rebound. So this is a very swift downturn as well as a swift upturn. So all this literally took place probably in about a week or so, maybe 2 weeks. Okay. So again, that's why it's important to stay invested in the market, because you never know when something like this is going to happen. All right. So it goes here all the way down to 68. And then again, it bounced all the way back, almost all the way up to 90. Oh, it did touch 90, back to 93. So that's a big move from September to November 15th. It went all the way back up. Okay, so again, stay invested, no matter what's going on in the news, no matter what's going on outside. Okay, all right. And so we're going to take a look at the last 3 months. It's been kind of looking for a direction. Do we see the gas prices going down? Not really. Do we see this pretty much going down? Not really. So I think that it's in a holding pattern. I think it's in a situation where it's, not doing a huge amount of moves, from $83 to $84, from 93 to 84, it's about a 10, maybe a 10%, 15% move. But again, anytime you see kind of a downturn over the course of a few weeks, most of the time, that sector of the economy goes back up. So this is the oil, and it's XLEs, which represents the energy sector, not electricity, but the energy sector, typically dealing with oil and gas. Okay, so this is the activity that we see. If we go to an even tighter chart, the last 5 days, it went from 87 down to about 84, 83. Not a whole lot of action. However, when things do go down like that, typically in the gas and oil, you have some good things that take place. All right. So that is the oil sector. The next one that we want to look at, the next sector that we're going to talk about, is a financial sector. So the financial sector, I think, is very, very important, because you look at what's going on with all of the interest rate moves that are taking place in the economy. The Fed is doing a lot of things to kind of support the interest rate to bring down inflation. However, what does it look like? Financial companies are typically like your big banks, your big investment firms. How are they faring in this environment? So if we pull it back to, I guess, the last 2 years, it's been pretty flat. So 2 years ago, 2021, it was $33, $34 per share, give or take. Okay. It got to a high of 41.26, I think. Yeah, 41.51. And that happened the beginning of January last year. And it fell down with pretty much the rest of the economy. So the banking sector and the financial sector is a very, very big part of the economy. And you know, I believe that, history has shown us when you have interest rate moves that are up, financial companies typically make good money most of the time. So that means that they're able to lend at higher rates. It means that they're able to collect credit cards at higher rates. It means that they're able to do home loans at higher rates. So those things typically bode well for the overall market in the financial markets with those big banks and investment companies. Looking a little bit closer over the last month, it doesn't, again, I mean, it's been very, very flat. A month ago it was at $35 per share. Today it's at $35.66. Well, it was at $36.05 last, like a month ago, and now it's at $35.60. So one of the things that you have to realize is financial companies typically make money when the interest rate's higher. CD rates are a lot higher. And so what happens a lot of times, you have a lot of your mom and pops, they put more money in the bank to get a higher rate of interest. They want the CD, they're retired. They don't want to have interest rates that are no good for them, okay? So that's typically what happens. Again, this is the financial sector, and yeah, very flat, not much change. A low of like $31 and or 29, that recently happened in October of last year, and then a high of $41.35 over the last 2 years. That's not a big range. So financial sector has been very, very stable overall, a very small range, okay? Alrighty, so the next one that we're gonna look at is everyone's favorite car company, or most people's favorite car company. We're gonna look at Tesla, okay? So Tesla is a electric vehicle maker, and they've been having some issues lately. Let's pull it back to about 2 years. Okay, so 2 years, over the last 2 years, 2 years ago, it was trading at $185 per share. And then it got to a high of, let's see, $409.48. And then most recently, very recently, it had a low of 106 or 101. Oh, yeah, maybe it got to 101. Yeah, possibly we got to $99 a share or 101 per share. So Tesla's been kind of a company that has been in the news all the time. They recently bought Twitter over the last couple of months, and they have just been, looking for different ways to bring down the cost of lithium for their cars and their EVs. So one of the things that we got to do is we have to look at this with a little bit closer magnifying glass. A lot of people feel that because they were distracted by the the Twitter transaction, that it hurt their stock price. What was going on is they were trying to figure out what to do with Twitter. You have a lot of, court cases going on with Elon Musk. He's a very, very social person via social media and Twitter, and press conferences, you name it, he does it as a way to, I think, kind of keep his name in the forefront of a lot of people's minds so that they will buy his product. Does he have a good product? Yes, I believe he does have a very good product. However, I think that he does have a tough task to manage all the different companies that he's working with. So again, that's just my opinion, not financial advice. So here we have, most recently over the last 6 months, it looks like it had a high of $309.07, and the low was 10. Yeah, looks like the low was about 106. Not sure if it hit $99 a share or not, but that's kind of where we're at. So ever since that happened at the end of the year, Tesla's been pretty much going straight up, and that's what people love to see. So it hit, when did it break 200? Well, it did hit over $200 per share, February 15th. And you have that, which is a good thing. I think that, around those round numbers, sometimes companies are not sure what to do from there. So they usually go back down after that. Hopefully, Tesla continues to rise. However, I do think that you got to have a lot of caution, when it comes to, working with Tesla. All right. So another one, we're pulling this to the 1 month timetable. You have where it looks like, this is very, very strong. You have good volume and you have a very good level. It's pretty much been within striking distance of $200 per share over the last maybe 3 weeks. And it looks like it hit above that a few times. 1, 2, 3. Yeah, over the course of the last couple of weeks, it's hit over $200 per share, which is good. So a lot of times when it comes to charting and looking at charts and trying to figure out like, hey, what does that mean? When you have a company, and it doesn't have to be Tesla, it could be any company, that touches a certain level several times, that means that it's a very significant number for that company. Hopefully you like to see good volume and you like to see it break through. Doesn't always happen, but sometimes it takes a little bit more time to happen, like good news that might take place to allow it to push through. All right. And so the next one, so this is on Tesla. And so the next chart that we're going to look at is Apple. All right, so we're going to take a look at Apple. We're going to pull it back 2 years to see what's been going on with Apple. Over the course of the last 2 years, the low is about 115 per share. And that was in April of 20. Yeah, I guess that was. Yeah, well, I guess if we go back a little bit further, that's back too far. Let's go back 2 years. Yeah, 116. And then it got a high of 181. So from 115 to 181. And that was January last year. And again, Apple went down just like all the rest of them. And it hit kind of a low in the middle of the year, June of 129. And then again, it hit that same low number and crashed through a little bit to 125. And I think that was in, matter of fact, that was January. Yeah, that was January. So that was kind of a situation that happened with the stock. But again, this is all within a very specific range. It looks like this stock particularly trades between $125 per share and, let's see, and probably $170 per share. So that's about a $50 range between where it typically is. Yeah, probably about a $50 range between where it's at. Usually 125, and 170, give or take. So this is something where you can see that there's a lot of volume. So that means a lot of people own Apple. I like Apple. I think that it's more of a kind of your forever stocks. And the reason why I say that is because so many people own it. It, I think, probably resembles a little bit more so like Microsoft, being that a lot of people own your product already. So they may be growing through acquisition or something like that. But again, if you look at the charts always tell you what's going on with the company. And as you can see here, very stable. You don't see huge swings. Even though this did go down, it wasn't like a 50% value of the overall stock. And then right after that, it went back up. Okay. So that's what you want to kind of see when you have a stock. All right. And another one that we're going to look at is USMV, and this is the US minimum volatility. And this does have quite a bit of holders of this particular ETF because it has a lot of tried and true companies. And let's take a look. So over the last 2 years, again, it was 2 years ago, it was trading at, let's see. Yeah, it looks like around $65 a share. Piece of my chart got sliced off a little bit. So it's about $65 a share. And it looks like it hit a high of $80 per share. And that took place in December 30th. So it's right around that January peak that took place with a lot of other companies and a lot of other ETFs and mutual funds. That's kind of where the peak was for a lot of them. And then this one didn't fall as quickly because it's made up of things that are, companies that are very, very tried and true. All right. And so we have it went down a little bit here, $70, then it went back up almost to the $80. It went up to $78 per share, and then it went down. And this is in last year, June, which was a big significant day for a lot of companies. Went down, and then it went up, and then went down. So you see kind of a trading range between this one. It usually trades between, maybe like $65 a share and $80 or $75 per share, which is good. I mean, it doesn't have a lot of huge swings. And if it does, it's almost just like a basketball, bounces right back up off from where it was. Okay. So more recently, the 1 month numbers, it's been kind of stagnant. If you see here, a high of like 75.49 and a low of kind of where it's at right now, $71 per share over the last 3 months. 1 month numbers, again, a high of 73 and a low of where it's at right now, $70 was the low. But again, you have a prolonged couple of weeks of the market going down, and this particular fund typically bounces right back up. All right, and maybe it already started. I don't know. Maybe it already started. I mean, we'll have to wait and see. But it does look like it possibly started as well to bounce back up. All right, so US minimum volatility. So these are big companies, pay dividends. They, very strong, recognize a lot of the names that are in there. And this is kind of what's been going on overall. So again, this has been Minute with Isaac. I hope you enjoyed the kind of the breakdown in the chart. I'm a visual person, so I do like looking at the charts and sharing that information with you. Please take a look and see if there's any questions that you may have about the charts. Feel free to subscribe to my channel and get any updates. So, Minute with Isaac, we'll see you guys next time. Take care.